Morning, happy, what day is today? Tuesday. All right, am I on? Is my video good? I think I'm good. Okay. Good morning. Welcome to the morning show. Happy Tuesday. Spencer, JC, Steve, Alfonso, full crew back in action. It's been like over a week, but we're here now. I'm excited. Haven't spoken to Steve in a minute. Got to find out what's on his mind. What else? Well, if Anne-Marie Baiynd hop in today, I haven't talked to Anne-Marie in quite a while. She is a personal favorite of mine. I've been talking to Anne-Marie for years. I think she's awesome, and it's always a treat to talk to her. She always has a very calming, soothing effect. I find whenever things get super volatile, I like to talk to her. She calms me down. We'll have Anne-Marie stop by. We'll have Kenny Glick stop by. We'll have Patrick Donawillis stop by, and yeah, we'll see where that gets us. So who's ready? Are we good, chat? Yes? Everyone is liking the stream. They're waking their neighbors. They're telling their friends. All right, let's do it.
Oh, we back. Strazza's got his Florida man shirt on.
Good morning.
Good morning. How are you, sir?
My restream is freezing up. Is it okay on your guys' end?
I was gonna say, is it just me, or I thought it was just me?
No, he's good. He's good on my end.
There we go. All right.
Oh,
good to see you, Spencer.
Likewise.
Can we talk about the interest rates in Japan? I don't really see what the big deal is. Like, why are people freaking out about interest rates in Japan? That doesn't seem like we should care at all.
Pass.
We don't care. So that's the official take on the morning show. Japanese interest rates. Nobody cares.
I got a good one for you. Speaking of which, you guys probably covered the Moody's market yesterday.
Covered is a word,
the
but
fact
yes.
that these schmendricks are still rating bonds, like, what business do these people have rating bonds?
So thanks, Moody's. Where the fuck have you been? Also, the other two moved a long time ago on this.
S&P was in 2011, right? They downgraded the U.S. debt in 2011.
It's not news. They're not relevant at all anymore. Maybe this was like their final moment. But anyway, they asked Scott, what's his name? Scott Bessent.
Yes.
About it. They said, what about like the U.S. credit downgrade? He said, who cares? You need people like him in the White House and on Capitol Hill from Wall Street for that reason. He like laughed at the question. I thought that was.
Listen, bond rating agencies. This is one of those "you suck" segments that I like to whip out every now and then. Bond rating agencies, you suck. You suck. Do better, or just go away. Go away. You suck.
We give a lot of this stuff a hard time. These guys are the worst.
How do they still exist? Fitch Ratings? Get the fuck out of here.
They got in zero trouble for their involvement in the financial crisis, too.
Dude, these people suck. Dude, like, these are the worst people. Like, these people make economists look like nuns, you know?
That may have been my favorite scene in The Big Short with Marissa Leo. She got the oversized sunglasses and she can't really read. And she's like, what do you think we do here? You know, they're talking about.
I gotta watch that movie again. I'm very thankful for that movie because that movie inspired so many short sellers that think that they're calling the next great financial crisis, and then they just squeeze and just they get their faces ripped off, right? So we're very grateful for that movie. I'm gonna go back and we'll watch it again. I remember like the stripper scenes when they were like hanging out with the strippers and the strippers are flipping houses. Yes. Like, that was funny. I remember that. I haven't seen the movie in a minute, but
it holds up incredibly well.
I'm gonna watch it when I have nothing to do.
Steve, I was bummed with that you weren't on the show last week because you missed. I mean, you didn't miss it, I'm sure, but Coinbase in the S&P 500. How about them apples?
Who's surprised?
It happened the first Coinbase than I thought. Coinbase first crypto company in the S&P 500. Do you think it is the last?
I don't see another one coming anytime soon.
I don't know who.
Ooh, you don't see another one coming anytime soon. So what is the over-under on how long it takes another crypto firm to be added to the S&P 500? And let's remember, there's a gray area of what is considered a crypto firm. Is Robinhood considered a crypto firm?
Well, they would be the only one, but they're not a crypto firm. So they have a shot maybe in the future. Robinhood's been doing some great things. We'll see if it sticks into the future, but the moves they've made over the course of the past 2 years have set them up on a nice growth trajectory. Market continues to reward them. They would be on a list for inclusion, but I don't think they're crypto. And then the miners never get there, and MicroStrategy would never meet the requirements. But
And why
Coinbase,
doesn't MicroStrategy meet the requirement? Because they have to earn money?
it's not a business, dude. It's not a business.
Seems like this business is going pretty well. I'm long. I mean, no.
I think you need operating profits, right?
And what they're doing with the Bitcoin strategy is not operations.
No, it's a non-operate. It's speculation. It's capital.
Okay,
gain.
but what about like these like Blackstone and like some of these other speculators that are publicly traded?
That they're in the business of speculating.
And they're not, and MicroStrategy is not in the business of speculating?
I don't know exactly how it works, but it's investment income, and I think that's what keeps them out. They're not going into the S&P 500.
All right.
So, Coinbase is a highly profitable business, very different from MicroStrategy, doing all the right things out here. And just imagine a world where altcoins start mooning again. And I'll tell you, some tight formations out here in crypto land, especially as you go down the cap scale. If altcoins start ripping again, Coinbase is going to be one of the best performers this year again.
ARK has its highest short interest ever. So when you look at the types of names that are inside of the ARK ETF, these are all, I mean, we're talking Tesla, Coinbase, Robinhood, these are the names that are working. A lot of company names that have the word therapeutics in them, right?
I'll tell you, JC, these speculative growth stocks look really good right now. And all those moonshot groups from, the back half of last year are working again. You see these quantum stocks? They're back.
Oh, yeah.
Space stuff's back too. Rocket Labs looks fantastic right now.
Yeah, these things are on the move. What do we do with a little state of the markets? A little state of the markets? What do you say, Spencer?
Please.
All right, we've got the Dow futures this morning doing nothing. Flat Dow this morning, 42,800 and change. We got S&Ps down close to 1/3%, just under 6,000, believe it or not, for the S&P 500. NASDAQ 100 futures leading the way to the downside, down 100 points. That's almost 0.5% to the downside. 21,430 for the NASDAQ 100 futures. 30-year bonds are flat, just under 113. Crude oil flat, just under 62. Copper down almost 1%, 463 for copper. Gold up 0.5%, 32.50. Silver up almost 1%, 32.75. With the VIX down towards 18. Over in funny money land, we got things moving on the move. Things on the move today. We got Bitcoin down almost 1,000 points, back under 105. We're looking at 104,700 for Bitcoin. ETH down 1.6%, just under 2,500. We got the old Solana, 165, down about 80 basis points, with the total crypto market cap, Mr. Spencer Israel, 3.25 trillion, 3.25 trillion. What stands out from this morning's futures?
There's just a relentless bid for equities. Yesterday's tape was so interesting, right? Because we had a big down open on this nasty headline of U.S. credit downgrade. And
is that a nasty headline? I'm pretty sure nobody that we take seriously took that seriously.
No, look.
Like, who cares about something like this? Journalists? Like
15 years ago, 15 years ago when the first ones did it, I don't know if it was S&P or who's the other, Fitch? I don't know who did it first, but it was a big deal. Right now, yes, it's kind of like been played out. Everybody knows about it, but still. Anyway, it was a big down open, whether it was for that reason or not, and they reversed it.
Is it a big down open?
Yeah, JC, it was. Pay attention to the tape, for crying out loud. Okay,
I think S&Ps were down like 50 basis points on the open. Is that considered a big down open now?
Look, one of the things.
Did I miss something? Was it down more than that? No, I'm not being an asshole. Like, I'm legit.
One of the things that's helped me navigate turns in the market and nail inflection points over and over and over again is watching the tape and reading the tape day in and day out and doing it within the context of the market moving headlines of the day, right? That's something that I do every single day, and it works. So you can laugh all you want, but when they knock them down in the morning and you got big red open and futures are red across the board,
it was a little red open.
U.S. credit is getting downgraded, and then that bulls come in and reverse it throughout the day.
Listen, I'm with you on watching the tape.
Bid for risk assets right now. The animal spirits are alive and well. Risk on groups keep joining the party. Look at solar energy. Look at all of the stuff that wasn't working before. Small caps, transports, everything else. The homies are back on trend. It's all working out here.
I'm with you on the tape. When they bid them up and they take them out at the highs and they open at the lows, that sort of thing really stands out. I will agree with you wholeheartedly on the relentless bid for risk assets in general, sector rotation. I would argue that what we just saw in consumer discretionary may be the biggest development we have seen in Q2. Do you think there's hyperbole there? You think I'm exaggerating, or you think that's legit?
I think the offense is on the field, man, and you just want to own some of the riskiest assets you could find. And you're even seeing it overseas. Weren't you the one who was saying a month ago, we have the most bears in history? Where are you, bears? Where did the bears go? They really disappeared fast. Most bears ever. Can't find them. Can't find them. Don't know where they're hiding.
Going on a bear hunt.
I'm going to talk about a good survey for recess today. A real survey. You all better be there. Yeah.
Oh
We're
shit.
talk about a real survey.
Can you throw up slide 1, please? This is, in my humble opinion, the biggest development for U.S. equities in Q2. How do you like me now?
How you like me now?
So let me just remind everybody, including the bears that are hiding, they're hibernating. I believe that's what bears do. They go hibernating. And if they get woken up in the middle of winter, look out. So, we want to leave them alone. These are some depressed ass motherfuckers, the perma bears, man. Can you imagine being one of these losers? Oh, so listen, we're coming into the month, and you got all the offensive sectors are above the prior cycle highs, right? We've talked about it on the show. You had financials, never even retested the prior cycle highs. Industrials are making all-time highs, never retested the prior cycle highs. Communications and technology did retest those prior cycle highs, but all 4 of those offensive sectors at all times this year remained above the late 21, early 22 highs. Financials, industrials, tech, and communications. It was consumer discretionary, arguably maybe the most important of all of them. I'm not going to make that argument, but it could, right? It could, considering this is a consumer-based economy is what I'm told. And so, when you have the consumer discretionary space as the only one of those 5 below the prior cycle highs, you question, okay, is consumer discretionary telling us something that the others aren't seeing? Or is this just a fugazi breakdown and now discretionary is going to catch up to the rest and the weight of the evidence suggests that it's risk on, we're going higher? As it turns out, it was the latter, right? We kind of thought it would be the latter. That was kind of like the higher probability of the outcome. But to be fair, we didn't know, right? That was the question that we were asking. I know I certainly was. And now here you go. Voila. The consumer discretionary space is above those highs. And when you talk about speculative growth, which Strazza obviously continues to pound the table about, hard to have a conversation about speculative growth and this rotation into the offense and the offense is on the field, call your offensive plays. Hard to say all those things without consumer discretionary at least participating. Doesn't have to be the leader, but at least participating. Would you agree with that, Mr. Strazza?
Yes, but it has been the leader, right, off the lows, and that's a monster development because some of these risk appetite ratios did not look very good. These risk appetite ratios were a big part of the weight of the evidence that was turning us bearish back in the first quarter, right? Things like staples were breaking out of a base on relative terms. That has failed miserably. High beta, low vol, right? Back in high beta's favor. So all these risk appetite ratios are really confirming the strength of this rebound off of last month's lows. They're saying more. These risk appetite ratios, they're saying more. Breakouts like this, more. V-shaped bottom. You know who completed the V? Industrials.
Strazza, you're spot on what you're talking about. Strazza is talking about how the leader off the lows was consumer discretionary. There's no question.
You want that, and you want that.
But go back quickly, and we'll come back to the industrials. The leader off the lows was consumer discretionary, or is consumer discretionary. But the developments from a structural perspective, putting discretionaries back above those levels on that gap higher, that's a big structural move that now we could say is intact, right?
And if you're an index person, I mean, this is beautiful. This is actionable, right? This is a great risk level.
All right, now throw up the industrials because this is the sector of all the S&P sectors. This is the one that has the highest correlation with the S&P 500 of all S&P sectors, and it just closed at
Big
new
deal.
all-time highs.
Industrials, they're like kind of a big deal, you know?
Very diversified group. The largest component is 5%. GE, shout out Connecticut.
I would say discretionary and industrials. Those are the groups that I want to see doing well more than anything when I'm bullish. Right. Those are the two groups. They're broad.
Still
they're diverse.
hating on the
they're
financials,
huge.
I see. Still hating on the financials. Okay.
Yeah, man. The financials aren't. They're not what they used to be. Unfortunately,
that is such bullshit.
No, it's not. The
Dude,
regulated.
you are so
utilities.
full of shit.
Yeah.
Financials, European bank ETF, all-time highs. Indian banks, absolutely ripping. U.S. financials, ripping.
How much can a group of companies that are not allowed to fail actually tell you?
Dude,
About
you're
risk.
so wrong.
No,
if there's structural problems in the market, you're gonna see it in financials, bro.
You're only gonna see so much.
Dude,
It's not as much market forces as it used to be.
Listen, I know, you know, you're a young man, right? You're a young man in an old man's body. You're a young man at heart, right? And I respect that. You're just wrong here. Financials, I think you're underestimating financials, dude.
I know these companies from the inside out. Okay. I've worked at some of the biggest financial institutions in the world, audited them
go.
till midnight, 1 o'clock, 2 o'clock in the morning for years. I know these businesses, and they're very different today than they were just 15 years ago. I'm telling you. I don't think they carry the same information. And I'm talking specifically about banks for the most part. What?
I think you're wrong. And I question, is it because I grew up in the 2000s and the great financial crisis and I think they're so important? I wonder if it's just because of how I came up. And I'm going to say, no, that's not why. It's because they actually are. You don't have bull markets without financials. And I still believe that.
I got to go get my Lehman mug for this conversation.
It's Lehman.
Lehman.
The Lehman brothers were inseparable. You know, people would have a hard time just trying to guess who was who. They were always together, these Lehman brothers.
Oh, they were brothers? There were actual Lehman brothers.
They were actual Lehman brothers. Yeah, they were bros. And then, you know, like there was all kinds of like you know, inter-financial system marriages going on with the Goldmans and the Saxes and then the Lehmans. There was all kinds of stuff happening.
Was Strazza not alive during the GFC one hole? It's hard to say. Thank you.
You know, alive's a strong word.
Yeah.
You know.
It was in college, so.
Yeah. Right. So it was college. So it's like alive. Was he alive? You know, like technically by the definition of alive, but was he really alive? You know.
Good stuff.
Good stuff this morning, guys. Good stuff this morning. We got Larry Thompson in the house. One hole. Shout out one hole. Yasul in the house. Wait for the deregulation. Is there going to be deregulation? Could there be any more deregulation?
I don't know. I was pretty excited about that. Haven't heard boo about it. Seems to be focused on other things right now.
You see that? You see that little that QR code there that just came out? We got the conference call tonight.
Click it. Or what do? You take a picture of it? How do you do that?
All right, Boomer, get your phone out, and you don't take a picture of it. You just put the screen on, and then the link comes out.
The yellow button. I know.
See, look, someone scanned the QR code. That was Strazza. Strazza, give everybody. Can we give Strazza a round of applause? First QR code for the fella. Good job, Strazza.
You got to play with the toys. You got to play. You got to learn the new tools. Great post on there too. Feeling positive energy. Check it out. You like the energy here or no? It's a mixed bag. Some of us like it. Some of us don't. I don't know. Where do you fall on the energy? JC, why wouldn't it work? Everything's working.
I hate to keep coming back to the to people are crazy, but man, people are crazy, bro.
What? Crude oil is going to complete a massive multi-year distribution pattern. Things are getting better out here, not worse.
Throw up slide one there, please, there, Mr.
Everything
Spencer
else is
Israel.
You know, somebody taught me about bull markets a long time ago. They said in bull markets, the bad ones catch up to the good ones and not the other way around. Is that true? Because if that's true, bodes well for energy here, doesn't it? I don't know. Energy.
Listen, it always comes back to the humans. And these humans with their lizard brains.
Yep.
This is the latest University of Michigan survey. 1 year inflation expectations broken down by party affiliation.
God.
Look at the difference between the libs and the righties. The libs are looking for 9.6% inflation. The Republicans, no inflation.
What's funny is that either of them being right would be terrible outcome.
I'm gonna go with it's probably somewhere in the middle, but just think about how crazy people are. Think about it. Like, these people are fucking nuts. Both of them, both sides. I'm not picking on anybody. You guys are fucking crazy. Seriously, the dispersion between these two is on another level.
Can I tell you, if I was president, the first thing I would do, I would cancel this survey.
No, we like the survey. We like to see how angry people are. People are very angry.
No, I'd ban it like Harvard.
Second lowest consumer sentiment of all time.
JC, I know you like to fade surveys. This is this is so useless. I don't even think you can.
It's not useless. Stop. I'm simply pointing out that humans are crazy. And if we're not out here trying to take advantage of their craziness and take money for ourselves, what are we even doing here? Like, this is exhibit A as to how crazy humans are. No? Tell me I'm wrong.
This is such a bad word. I can't say it on TV.
Good thing we're not on TV. But this survey might be the worst thing that we talk about. The dumbest thing that we talk about.
But he asked me about energy. So how do I feel about energy? I want to think about how people feel about higher inflation. And then I look at this I'm like, wow, these people are nuts.
What identified Democrats and Republicans think about inflation is going to tell me where energy is going. Get out of here. Talk to me about the COT position.
No. It's not that it's going to tell us where energy is. It's going to reiterate just how crazy humans are. And then with that, we want to fade humans because humans are irrational, particularly when their stress levels are elevated, which happens when there's money involved. And then you add a layer of politics and it's triple crazy, right? So that's all I'm saying here. Now, with that being said, when you go sector by sector, industry group by industry group, some of the highest short interest of all of them is in oil services and explorers and producers. Nobody wants to be involved. Nobody likes these things. Fun fact, if you throw up the new slide too there, Spencer, fun fact, the XLE, which is the S&P 500 Energy Sector Index, is the only one of all of them that is still below their great financial crisis highs. It's the only one. The only one. So they're fading. I think the libs got this one probably more right than the righties. I don't know about 9.2%, you fucking lunatics, but probably not zero like the Republicans think. Notice how the Republicans thought inflation was going through the roof when Biden was in office, right? So I'm not picking on any one group. Y'all are nuts.
1%. So either a historical low or back to post-COVID inflation highs.
Dude, these people are nuts. These people are bananas. So when I see super heavy short interest in oil services and explorers and producers, I'm thinking, And then what Strazza just said, is crude oil going to complete this massive top in the middle of a raging bull market? So I wonder, should we be shorting these energy stocks? I'm thinking I definitely don't. I bought my second energy stock last week, and I may be buying a third one this week.
We just put out a post with a handful of names, a nice mix. We hit every subgroup. I got to tell you, I like it more and more. And that divergence that you were just showing on that last chart, I think is a big deal. Like, what are energy stocks telling us, right? They don't look as bad as crude oil here. Some of them, I'll shout out. Landbridge was my favorite of the names that I was looking through yesterday. Landbridge is a really unique play. It's similar to Texas Pacific Land, TPL.
Sam loves this one too. He's been pounding the table about this one.
So this is a royalty company. It hasn't been around for very long. You're not going to find a chart that looks better in the energy space. It'll pay you a nice yield. Why not get involved? A little LB breaking out to new all-time highs.
So this is a special situation.
Mm-hmm. And JC, we were just talking about that sweet spot yield. This is one of those companies.
$6.5 billion market cap is not nothing. This is a great chart, dude. I think I'm gonna buy this stock. All right, guys, I'm out. I gotta hop for the day. See you guys tonight. If you don't have the link for tonight and you're not gonna be there, I don't know what you're thinking. Spencer and Strazza are gonna be there. Strazza's gonna be like, "Hello, John."
What the fuck?
What?
Hey,
okay.
Are you gonna come back for my recess today? Because it's important. There's something that you should do in my recess. Yeah.
What?
All right.
9:30.
Well, okay. It doesn't matter. I'm bringing Kenny. You're here. I see you. I'm bringing you out. Silliness.
I got
It's been a long time coming. They ain't come from my club, they tugging. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
Kenny Glick in the house. Kenny,
I don't know.
How was the Grateful Dead show
work.
last week?
It got rained. I was raining. It was raining all day. I didn't go. So yeah, it blew. I'm upset about it. But let's talk. I thought you guys were playing If I Was President. If I was president, oh my God, I would have the best time. Know what I would do? I would send everybody a little wood radio, like the old timey radios, and it would tune into one channel, me. And every Friday at 4:20, I'd sit down with the nation and blaze up, and we'd have a little fireside chat and talk about the week's events, talk about delusional ideas. We talk about, all the conspiracy theories, and I'd set the nation straight every week at 4:20 over a nice blaze. So 4:20 Fridays with the president, and you'd get this free T-shirt. So here in VWAP we trust. Don't be a dick. Vote Glick 2024. I'm going to make these shirts for 2028, guys. Don't be a dick. Vote Glick. Let's take it serious. The old hit the bid T-shirts. Let's go.
You could also go for the midterms, which are next year, Kenny. You don't have to wait for the presidency. You can go. You can run for Congress.
No, I'm going right to president.
Okay.
If Herschel Walker could come this close to becoming a senator, I'm going.
That's what I'm saying. That's my point. The bar is lower. You can get in.
Yeah.
Right.
Yeah. I remember as a kid, I used to think all politicians were learned, scholarly, good, moral people. I don't know what I was thinking. Ronald Reagan just did it for me. I just put him on a pedestal. And ever since that moment, it's all crumbling down for me.
All right. Anyway, what are you watching this morning?
Let's talk about quantum, baby.
I knew you were going to say that. They had some news this morning, and it's up 20%.
Right.
Was it earnings? I think it was earnings.
Let's talk about relative strength. If you didn't notice, while the market was
it was not earnings. I lied.
Yeah, they've all had earnings, most of them, and they've all been all right, and they've all popped on the earnings, which is really a great indication of strength. But really, the strength that they were showing while the market was selling off was a little, eyebrow raising. So when something's showing strength before the market starts to come around, what happens when the market comes around? They get an extra bump. So here we are. Yeah, loving them. Yeah. Even the lesser known ones, what was the one that was hot yesterday?
There's QUBT up 10% this morning.
Yeah, we had the subtle one. It was I can't really remember. ARQQ came back to life, and QMCO, I think it was. Yeah, QMCO, one of the lesser ones. Popped through 11 yesterday and just ripped 3 points. So that's the one I got my eye on. That one went to 90. That was one of the that was the bigger short squeeze of the whole group. You got the Rigatonis and the QBERT and the QBits. Yeah. But QMCO, keep an eye on that one, the lesser known one. It's ripe and ready.
I see a lot of quantum, and I see a lot of AI, and I see a lot of biosciences in my up filters movers scan this morning. So it's risk on for Kenny. Not just Kenny.
We're still in the power gap, the third power gap. Yesterday was kind of cute, right? You came in thinking that, again, sorry, I had this crazy freaking toothache yesterday. I couldn't even think, but I still powered through it in the room. But if you didn't think that throwing a Moody's downgrade on a Friday afternoon was the most dastardly thing they could think of, like, quick, the market's going up too fast. Let's think of something to stop it. Here, dust this one off. Here, let's go with a downgrade of U.S. debt. No, we tried that again. We tried that 10 years ago. It didn't work. No, try it again. Here, dust this one off.
They tried twice, Kenny. They tried twice. Yesterday Friday was the third time.
Yeah. So funny. And when the market was gapped down, I mean, all I was looking for was please have the market gap down on Monday. So QQQ and our new favorite stock, CoreWeave, which I still have no idea what they do. Something internet, something Bitcoin, something computers. I'm not sure, this internet thing. But CoreWeave, when an IPO breaks all-time highs and gets into the 50s, it goes to 80. And now that we got through the 80s, I'm thinking 120 on this stock, and there's no reason to sell unless it breaks yesterday's lows. So this market is just awesome. It really is.
I couldn't say better myself. Hey, guys, if you want to trade with Kenny, he's in his room live right now. trading the movers, the high flyers, the quantum, the D waves, the
I'll give you a couple of weird ones. We got
here we go.
NRXS is one for you. You crazy kids, you.
NRXS.
NRXS. If it
Rule of thumb: if a ticker has X and S,
I'm in. No, I'm not in yet, but I'm looking to see if we'll pull back to 450 might be interesting. What was the other one that was just now? It's SYTA. I'm sure you guys are all about that. You know what else? He woke up last night. Bull finally he came off the 1250 BULL. That stock's going to.
I want to mention you have another one of those discount brokers that are public now. eToro.
I haven't looked at it. Yeah, I missed the IPO day. I actually haven't pulled the ticker up and even looked at it yet, but I will today.
Yeah. All right. Kenny Glick, guys, hit the bid.com. Kenny, keep on keeping on, man.
Hey, before I go, listen, guys, before, we do all this rambling on in the morning session, coming soon to this channel, 12 o'clock review with me. So that's going to be a lot of fun. So
Kenny's going to be going live midday.
Right.
Midday very soon.
We'll talk about what you missed and what to prepare for the afternoon and even prepare for the next day. All right, y'all? All right, you guys have a great day. Peace.
All right. And he's out. All right, let's bring on today's featured guest. We've got Anne-Marie Baiynd in the house. When's the last time we had Anne-Marie on the show?
I just want to say, Kenny is one of the most fun people you'll find in the market. I think it's so awesome that he's going to come on and do a midday show.
Yep.
That's sweet. There's nobody I want to hear like their mouth during the day. Like I have everything on mute. I would listen to Kenny because he's fun, right? You have to have fun out here. You got to have fun. And he's doing
it. And like, fun. I have learned so much about trading from Kenny. Just by being in his room for like a couple minutes a day. It's like, because he's been doing this more or less the same handful of strategies for like, I think like 15 years now.
He's a great trader. That's why he's able to have fun. Yeah. Right. This guy who's figured it all out. He's got a tried and true process.
And the ultimate irony is like sometimes like, and if you're in the room, like, this, sometimes like the trading, it's not exactly fun. It's actually kind of boring, right? He's just kind of sitting there and he's waiting and he's waiting. But Kenny makes it fun. That's the point I'm trying to make is Kenny makes it fun. So
also just say another one. There's somebody in the chat. Smash sounds like he loves to lose money. He said Strazza was probably the one occupying Wall Street. I actually have a story about that.
Dude.
My very first job, Spencer, it was the shittiest job ever. And when you're an auditor, you have to dress one level up above your clients, one level fancier as an auditor. So I'm working at Wall Street banks, walking my ass. I'm coming from Stanford, so my commute sucks. I'm up at like 5 o'clock in the morning every morning. I'm getting home at like 1 a.m. And I have to walk through this mob of people my age in a suit, sweating my ass off, lost already, don't know where I'm going. So that was my experience. Nobody hates Occupy Wall Street more than this guy. I almost quit my very first job out of college. I thought I was going to get like mugged by these people walking to work every morning.
Yeah, I commuted to New York for I guess about a year in total, maybe a little over a year over the course of several years there, and I do not miss the summers and the subway and the sweat and everyone's trying to get home or they're trying to get to work.
And you're a sweater like me, so it's literally untenable. The city, like the subway in the summer, you're soaking wet and your day hasn't even begun.
Brutal.
Soaking wet. Changing socks in the bathroom.
All right, come on. Now you've gone one step too far. I never had to do that.
The pony earnings were good. I'm watching this one. It's China, it's AI, it's autonomous vehicles, a lot of stuff to like there, robo-taxi shit. But I think it's priced in. They run this thing a lot, the pony boy.
We last spoke to Anne-Marie Baiynd in August of last year. It's been almost 12 months. Unbelievable.
How did you let that happen?
Let's bring her out.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
I'm lagging here today. I don't know if I'm on screen, if I'm off screen.
Anne-Marie,
what's going on with the systems today? Sounds bad.
I don't know. Anne-Marie, can you hear us?
Can I hit my jewel? Okay.
Anne-Marie.
Hey guys. How are you?
She got us. I don't know. Restream is being funky today. I'm not quite sure what's going on. There's a ghost in the machine or something.
Gremlin.
Yeah.
Emery, what do you think happened? Why has it been so long? Is this Spencer's fault?
It's probably my fault.
Oh,
I'll
okay.
take the
You're too
blame.
nice. You're too
It's
nice.
me.
Well, I'm so glad you're here. We need, like, to talk to calm, collected people who have it all figured out in times like this.
You know, I was watching the show this morning and I went, wow, these guys were so energetic. What's going to happen when I come on?
I'm
They're
feeling
gonna
hot
have
today.
to.
I got a lot on my mind. We could talk about anything.
So can I. So let's do it.
Have you seen a tariff tantrum like this in your career? You seen any? Can
No.
you remember a period like this? No.
No. Although I did, someone said, "Hey, listen, the first Trump 1.0, obviously his tweets did a whole lot
Yeah.
to move market action. So that really hasn't changed.
Yep.
But I have this idea I want to ask you about.
Mm.
So we know the media, and of course, JC always talks about, hey, don't listen to all the whatever, the
He's
market's
listening.
bullish and so
He
on and
listens.
so forth. Right. And so we know that a lot of media has been really, really bearish. And since I sit in the futures market so much, I honestly suspect that this run up on the kind of volume and open interest that we're seeing, particularly in the indices, is short covering from shorts getting absolutely smashed every single week.
And you think a short covering rally could really have these kinds of legs?
I do.
Still, yeah.
I do.
Because
And
March
go
and
ahead.
early April were pretty bad.
Yes, but what it did was move them in. And if you look at the commodity technical advisors,
Yeah.
they were short, got caught flat-footed on the literal V bounce that
Yep.
we had, and they still have not all covered.
Yeah.
And so we potentially have a fair bit more juice to the upside, in my mind.
Did we see something similar? Because I just look at the chart structures between now and the 2020 lows, very similar, just in terms of degree.
Yes.
Did you see
Yes.
the same thing in terms of positioning back during the COVID lows? Like, was that a short covering
You know
situation?
what?
I
I
mean,
it was until it wasn't. And
right.
so what I mean by that is
Yep.
it began as that reflexive bounce where people said, oh my gosh, we're actually going to get free money. And, the market always is ahead of what's going on in the economy. And so what that ended up doing was just priming the pump for everybody getting their dollar bills and throwing them into the market.
Yeah. Eventually, you do need fresh buyers.
Yeah. And so here's the thing. What we're seeing is more liquidity getting pumped into the market, right? There's a lot of quantitative easing going in. Our thoughts about quantitative tightening are slipping away.
Yeah.
And so there feels like there's a fair bit of fuel to really push the market up without structural things breaking down. And so my thought is that the real tipping point is going to come from how low can we keep energy prices, because they are the most they're the biggest input besides human capital. And it's
Yeah.
easy to say, hey, I'm going to lay you off, but you got to keep the lights on. And so if energy starts climbing, I think we see real degradation, because what's going on with Europe?
Degradation in what?
Degradation in earnings.
Really?
Yeah,
Okay. Just because of the
degradation.
cost structures. Yep.
Exactly. And Europe really doing fairly well. They are looking at things going, hey, we probably are going to drop another 25 basis points. We know that what Switzerland has negative rates now. And so if we're staring that down, they can kick the can down the street as long as energy stays cheap. If
Do you,
energy starts ballooning, we're going to have a problem.
now, if I were a perma bull, couldn't I say something like, but AI is at the same time improving cost structures across the board, broadly speaking, and that's a stronger tailwind?
Potentially, except the amount of energy required to power AI is
It's
extraordinary.
circular.
No.
Yeah, it is. We were talking about that a lot last week, actually. And there's some new exciting companies that are supposed to be these small modular reactor companies.
Yep.
That are helping with that. Are
We have,
trending really well.
yeah, and we have to get people not afraid of nuclear, because that's going to be our answer, truly.
Look, I think the world has really come around on nuclear. From the beginning of my career to now, it was like a never 10 years ago. And now it's almost like bipartisan. So I think we're
Yeah.
getting, thank God.
You hope, but when I talk about nuclear, even to young people, they're like,
Yeah.
what?
They saw a Netflix documentary.
Exactly.
Yeah. Mhm.
Exactly. And so that's a pervasive move. And if you're trying to make money trading uranium, stop now. because
It's been rough.
it's been a beast. It's been a horrible beast to
You.
trade.
It's
Yeah.
one of these
Looking
groups.
right at it.
They have these massive bases that I feel like we've been writing about for 10 years now, and they still
I
look the
know.
same.
Yeah. It's just anytime you think it's going to break, nope. And
Yeah,
we got to get rid of some of that regulation that makes energy, nuclear energy plants so difficult to open. We've
Yeah.
got incredible overregulation there.
Absolutely. But that could be a potential tailwind in the future, right? This is one of those catalysts that
Yeah,
you're pointing to. It's coming. Well, let's go.
absolutely. Absolutely.
Something I've been thinking about a lot is just the way that markets evolve over time. Things are only getting more advanced in terms of the financial instruments, the platforms, and the tools that we use. Information is traveling faster. And when I look at these charts, it sure seems like cycles are becoming shorter and shorter and shorter. We're missing breath
100%.
for us. We're not getting all the traditional signals that we would get. It happened at COVID. We did get a prolonged one at the 2022 lows, but this to me is another abbreviated cycle. And if I think too hard about it, I can convince myself that like that makes a lot of sense, and we should probably expect more of that. You ever kind of
Oh,
think about
absolutely. Yeah. I think volatility is here to stay. Intraday volatility and larger volatility in advance. I mean,
Yeah,
if I put on my doomsday hat or I
right.
pull out my tinfoil hat out
Let's
of the
do it.
bottom here, we can sit down and go, listen, we have debt that continues to rise, but hey, no big deal. Japan's been running for 20 years at 250 GDP or whatever, and they're still doing fine. So that might not necessarily be a thing, but efficiency has become sort of something we don't really care about anymore. Let's just throw some money at it. Whatever we do, we're going to throw money at it. And at the end of the day, more money doesn't necessarily mean better run. And so, one key thing to look at is how many companies do we have here that wouldn't normally exist if we had a little bit more common sense floating around things. And that's not a particularly positive thing to say, especially if we're saying, hey, look at how these markets run, because we really only care about directional market moves. And that's what makes you so incredible, Strazza. Your calls have been,
Oh,
I mean, really great. I read
thanks, Anne-Marie.
yeah, they've been really, really good. And it's because you watch those cycles and can move in and out so quickly. But if we're thinking about the person that goes, hey, I want to invest in a company and see how well it can grow over time, that's not a thing anymore,
It's a
right?
different
We're
game.
yes, we're trading cycles more than fundamental strengths and longevity.
I think that breaks people's brains a little bit, though. People don't.
It's
they
real.
can't understand.
It's not easy being a value investor, a fundamental person. It's only getting harder. And you know the other thing too, governments are acting faster and faster these days
Yes.
than they ever used to.
Yeah,
I mean,
without a
look
doubt.
at how slow they were to save us in the financial crisis. Look at what they did with the little shitty banking situation a few years ago. Look at what they
Yeah.
just did during COVID at the pandemic. They're like you said, they're just throwing money. Oh
Yeah,
no,
they are. And so, you know, the
overseas
big,
too.
yes, absolutely. And the big thing is what we're not watching is this slow rolling dumpster fire of we live in such a consumer driven economy that people just don't care what they do to get what they want, right? So JP Morgan just put out an article, was it yesterday or the day before? They said, hey, listen, charge-offs are going to increase in 2026. We've had, and it's not the news, more bankruptcies this year than the 2007 crisis. Now we're much bigger. Yeah, now we're much bigger, so the percentage might not be that much bigger, but a lot of small businesses who were used to interest rates close to zero are now going to be living in this pervasive higher interest rate space. And I would imagine that we see a lot more failures over the long haul as interest rates stay sticky.
And
For over a decade, companies were built for a specific environment. And then it
Yes.
changed.
Yes.
That's why the
And it's
speculative
adapt
growth
or die.
situation was so
Yeah.
bad during the bear market of 22.
Yeah.
I mean, thank you zero interest rates for my Airbnb and my Uber and my Lyft and my DoorDash, right? All these things that we wouldn't have had that if not for that. So
Yeah,
Yeah.
for sure.
thanks.
A lot of great companies came out of it too.
True.
But also, Anne Marie, like the small businesses you talk about, like they're the ones that are going to be hit the hardest by tariffs, right? Like Walmart will be fine, right? Home Depot, who reported this morning, they'll be fine, right?
Yeah.
So Walmart,
You
eat
know, the flip side of that is, listen, there are a lot of people that came to a space where they said, hey, my business is not going to survive anymore. Think about all the guys on the floor. Change happened, and they either said, I got to find something else to do.
Yep.
And nothing's wrong with that, because guess what? There are opportunities everywhere where you can go, you know, I'm gonna be able to make a living doing something else. You know, the average 60-year-old like me would say, hey, I've had 3 or 4 careers. And so, yes, small businesses are going to feel the crunch, but they can adapt and they can go, hey, you know what? We're going to do something else. I mean, we've seen restaurants close all the time because their food sucks. Hey, I'm going to try something else. And so, or restaurants close because they don't have enough operating capital to build their frames. We just have to embrace the fact that change happens and we've got to adapt, or, you know, somebody's going to pass us by.
Shout out humans.
We are. It's
pretty
amazing.
good at it,
Our
yeah.
ability to survive is truly incredible. From
Does-
living in caves to what we do.
I love your perspectives. Does AI mostly scare you or mostly excite you?
Depends. And also, I watch Black Mirror. So
Yeah.
if you go, so if I've watched an episode of Black Mirror, I'll go, you know, it scares me.
I can't take another one of these AI movies where the servant takes
I
over, falls in love.
I haven't seen the new season yet. Is it?
Oh,
Are there AI? Is there AI stuff, Anne Marie?
Everything's AI on Netflix.
Everything's AI
Okay.
on Black Mirror.
Okay.
Literally,
I'll have to check
it's
it
all
out.
AI. Yeah. So, you know, I feel like I have hired 2 assistants for $20 a month.
Yeah.
Using AI. Truly.
Mhm.
It
Yes.
does all my spreadsheet building, it does all my presentation work, it calculates so many of my simple things that literally I was a one-man show working 20 hours a week doing that stuff, and now, two hours max, and I've
That's
got it
awesome.
done.
Good
Crazy.
for you. What are you using? Are you using ChatGPT?
I do use ChatGPT.
That's the best, isn't it?
I do think it's the best, although there's some things that it tells you that's a little bit weird, but most of the stuff is really fantastic.
Right.
Really, really fantastic.
Good for you.
Yeah,
Building spreadsheets. Shit.
I know. And it tells you, I mean, so many, listen, it'll build code for your trading platforms. I've done that. I've just spoken to it and said, here is what I want to see. And
Yeah.
it'll go boom, and it'll ask me where I want to get the data from. It's fantastic.
Yeah, hey, as Steve always says, you got to play with the new toys.
You gotta play
with the
toys.
JC says that too, right? So,
I just used a QR code.
okay, all
I
right,
did see that.
all right,
Seriously.
I did see that.
yeah. Anne Marie, is there anything that we're not talking about right now that is on your radar, whether macro or not, or something esoteric in the futures markets that you're seeing that you think people should pay attention to?
Well, except for the fact that we're rising under volume and open interest, that shows that we really are covering instead of adding. And of course, those people are hedging. They've got long portfolios,
Right.
right? We're in a big
They get
bullish
short again.
space. Exact. So they have to go, well, I better hedge
Yeah.
somewhere here. And now they have to take their hedges off. Right now, the VIX is sitting very low. Not that I love using the VIX.
Yeah.
I think it's largely broken
Yeah.
because of zero DTEs, but it's a space to
Oh.
look at, the VXX and the VVIX, which is the
Mhm.
volatility of the VIX. It's
VVIX.
sitting in spaces. Yeah, it's sitting in spaces where we normally either
Right.
move a little sideways or we have ourselves a little dip. I still think it's by the dip because there's so much liquidity still being forced into the market.
Yeah.
So, that's kind of what I'm keeping my eye on. I'm cautiously bullish.
And how do you feel about international equities? Are you interested at all? Do you think maybe we're entering like a new leadership regime where the rest of the world maybe does better than the US? A lot of talk about that.
Yeah, I am partial to the thought that the one thing that we are as Americans is innovative.
Hell yeah.
It doesn't matter what the storyboard is, how incredibly doomsday somebody's going to paint it. We're going to come out on top because we're scrappers. We literally are scrappers. We're going to get it done, whatever it is. And so I reject the decline of American exceptionalism. However, what I really think's going on with this emerging market, I don't know, Strazza, you will know this. When you look at emerging markets,
Mhm.
it's always they're reverting to some mean. They go,
Yeah.
oh my God, look at that. That's just down on the floorboard. We need to, and as soon as it gets to that mean, we're like, yeah, let's dump it. And you can make a ton of money doing that. But as far as buying and investing, I mean,
Right.
we got a lot of dirty shirts in the laundry.
This has been a short-term phenomena for now. Money poured out of stuff like emerging markets for years and years and years.
Exactly.
Getting a little bit back. Will it have legs is the question. These ratios, as you zoom out on these ratios, they still look like there's not much there and still favors
Yeah.
US. And Marie,
True,
you
true.
just have the best energy. I absolutely love your thoughts on America. I'm so bullish too. Love to hear it.
Thank you. Thank you.
How can you not be?
Well, one of my favorite quotes is from Winston Churchill, and he said, I'm a perpetual optimist. I feel like there's not much need to be anything else. And so, you might think the worst of the worst, but then you miss out on so many opportunities by thinking about the gloom and doom. You just got to take a chance. And if it doesn't work out, you find something else. You just manage your risk along the way.
Yeah. Also, I just think the people that say, "Oh, like I don't want a crash, but I think we need a crash, right? Because it's healthy." That's such a disingenuous thing to say.
Crazy.
It's like, why would you want, like, I don't want a depression, but we need a depression, right? It's like, no, we don't. We don't need a depression. We don't need anything, right? I'm sorry that you are offended by high valuations or whatever metric you're looking at, right? I'm sorry that offends you, but it's just
That
like,
is the bottom line, isn't it, Spencer?
yeah.
It is. They're no,
Some
it's not worth
people take valuations personally.
I
know?
guess it's so silly. Anyway, Anne Marie Baiynd, she is the author of the trading book. The link to that is in the description of this video on YouTube. Check it out. Follow her on Twitter or X, whatever it's called these days. Anne Marie, it's been far too long. Thank you for joining us. And
It's my pleasure. I love you guys. You are
right.
doing such great work. So
Always so
much
fun.
great content for the investor and the trader here. Just
Thank
keep
you, Anne-Marie.
on keeping on.
thank
Thanks,
you. Anne-Marie.
Henry. That means a lot from you.
Thanks.
All right.
Adios.
And on that note,
Got to get it back
all right.
to you next time. I'll just say, Yosel says, that's right. The women are smarter. Today on Stock Market TV, yeah, the women are smarter. Yeah. Yeah. What a beautiful aura.
Usually, I would say. What's that?
Beautiful aura she has about her. She's just so fun to talk to.
Yeah, I haven't seen Emery in person since like before COVID, I think. But yeah, got to get out of the house more. That's not going to happen, frankly. But
You had FOMO? You had FOMO last week?
I did have FOMO last week.
Yeah.
The FOMO wasn't so bad until I started seeing all the pictures. I was like, God damn, the pictures,
yeah.
right? You
Fun
know,
was happy.
it was easy for me on Tuesday to pretend, nothing was happening. Or even Wednesday, but then the pictures started rolling in. And I was like, oh shit, I gotta stop looking at this, right?
You know what you missed. I don't have to tell you. I don't have to make you feel bad. We
No,
only
no.
get to see each other a couple times a year, a lot of us, and we
And-
make it.
And on top of that,
here's
Steve,
what I'll say. Here's what I'll say about Portfolio Accelerator. Everybody who goes, we leave it all on the field. Okay, we leave it all on the field. Right? We got so much catching up to do. Right? So there's a lot of hanging out. I had no voice all day Saturday and Sunday. Came back. Got through my last call Friday afternoon. Spencer, break on multiplier. We went for like 50 minutes. At like 3:45, my voice is like cracking. I felt it going. I said, I just made it. And then I just couldn't talk to my girlfriend all weekend. She's pissed at me. It was her birthday.
Yeah. Hey, listen, if you want to potentially be at our next gathering, which is going to be in late September.
Oh, it's going to be a fun one.
In Toronto. I just dropped a link in the chat. I'll throw another QR code up on the screen. On top of all this, Steve, I'm getting notifications this morning because a year ago today, we were in Sonoma, California for that event.
Yeah.
So I'm getting the double FOMO. I'm getting the FOMO and the nostalgia, and it's a double whammy for me. So
I will say, of all the events, and they've all been lovely in their own right, Sonoma's still my favorite.
I think it was most people's favorite.
Spencer, I'll tell you something about Bourbon Street. Okay. Thank you. I know you wanted to put us right in the middle of the action. Spencer, I'm pretty sure Spencer picked the hotel. You probably had the final say in the hotel, right?
No, I did not pick the hotel.
This hotel, I don't know if all of Bourbon Street is like this, but I swear it was in the red lights district. The hotel was lovely when you're inside of it. You walk outside, streetwalkers everywhere.
That's Bourbon Street. That's a feature. That's not a bug.
I'll tell you another thing about Bourbon Street. It's like Vegas, 3-day max.
Oh,
3-day max. There's too much trouble. Too much trouble on
I believe you wholeheartedly.
There for a week.
Yeah, I believe you.
A lot of fun. Great oysters.
All right, let's do some recess and then hop out of here.
I want to talk about pizza.
Yeah, so this was a survey you dropped in Slack over the. So I didn't read it. I kind of wanted to keep it a surprise for myself. So what is the survey?
So I just want to say, this is a big deal to me. It's very important to people from Connecticut in general. Connecticut is more famous for pizza than New York. They don't get the credit that way because, I don't know, people from New York are really good at rewriting history over time. But we were here first. We have the best pizza. Everybody knows it. I appreciate, say what you want about somebody like Dave Portnoy. I appreciate him because he's helped really put New Haven style pizza on the map. So this was actually an excellent survey. It was done well. 14,000 people all around the state of Connecticut, right? People who know Connecticut pizza voting for the best pizza. And if you look at the list, it's done really well. Like, I can't argue with it. They absolutely nailed it. So you have all the Worcester Street shops up top, pretty much Pepe, Sally's, Modern, in whatever order. They get the top 3 every time. And then after, are you throwing it up? And then after,
no.
just cut the list. After the New Haven style, my favorite, I should have worn my Colony shirt today, but Colony, which is just my favorite pizza in the absolute world, grew up going to Colony in Stamford, then at the one in Fairfield. My dad grew up going to the one in Stamford. Chris Drury eventually, made an investment in the franchise and put them all over Connecticut. They're awesome. But if you want the original, because the ovens are important, right? So it's something like Pepe's, you can't really go to the one in Fairfield. Like, don't go to the Pepe's at Mohegan Sun and think you had Pepe's. You got to go to Worcester. You got to go to New Haven to get the original brick oven Pepe's, right? So the same with Colony. You go to Stamford one. But I was really excited to see them as number 8 on the list. So Connecticut pizza, if you've never had it, it's really, really special. And this is a great list. I'm bullish this survey, and I'm bullish Connecticut, and I'm very bullish New Haven style pizza. And if you're ever in South Florida, in Stewart, they have a lovely place called Fantini's. Anytime it says a pizza, if there's an A before pizza, it's New Haven style. That's what that means. And he actually used to work at Pepe's and then moved all the way down to South Florida in Stewart. And now he's opening a bunch of restaurants left and right. And the pizza is spot on. It's really good. It's really close. So you're even getting New Haven style pizza coming down the Florida.
Hold on. So wait, just to back up for this. So this was a survey that was done by who exactly?
I don't fucking know.
Okay, but it was a survey. It was a survey of the best pizza places in Connecticut.
Mm-hmm.
Okay.
Mm-hmm. And they polled like 14,000 residents from all across the state.
Okay.
And that's really excellent. So if you get all of the pizza, Derby, that's all New Haven style. That's all classic New Haven style. But then right after that, you get Colony. And that's great because the people of Connecticut love Colony. It is such a special establishment. If you've never been there, you got to go. You get the hot oil pizza, get some stingers on it, nothing else. You know how they're doing the hot honey stuff? We talked about this. Hot honey is a trend. These guys take it to the next level, Spencer. They got a vat of just fucking oil, okay? That's just marinating with stingers, hot Italian frying peppers, and they just take a big spoon of it and just smother it all over your pizza. You could feel yourself dying. You could feel your arteries clogging as you inhale this pizza. I could eat more than one.
I have heard of Frank Pepe. That's the only one on this list that I've heard of is Frank Pepe.
Pepe, Modern, Sally's, they're the top 3. They always get the top 3. So they just nailed the list. And I think Colony, it's really appropriate. Colony's in the top 10.
All right.
It's really nice to see. Shout out Connecticut. Shout out pizza.
Yeah, if you're ever in Connecticut, you should probably get some pizza, right?
And a sandwich. And then just go to a deli and get a sandwich. Those are the 2 best things that we do, really.
All right. See, we started the show talking about a really stupid survey, and we ended the show with a really important survey. We came full circle today on the morning show. So, in all seriousness, there should probably be an Ohio State inflation survey to counteract the Michigan one because the Michigan one is just stupid. But in any case, okay, let's get out of here, Steve. It's 9:35. What's going on the channel today? Oh, we got a good one at 1:00. Jeff Mackey is going live with me. Actually, we're going to talk about the death of Foot Locker. If you missed it last week, Dick's is buying Foot Locker for like $2 billion, and Jeff is like, they're going to destroy it. This is the end of Foot Locker. There are implications for Dick's Sporting Goods. There are implications for Nike, for Under Armour, for Skechers, for the whole shoe universe. We're going to talk all about that.
I think the implication might be short dicks.
I'm not going to go that far, but if you want to say that, you can say that. I
tried a muffaletta. Speaking of food, I tried a muffaletta. It's like an Italian sandwich in New Orleans.
Isn't that Italian muffin? No,
it's an Italian combo, but you get it in New Orleans.
Oh, that's weird.
And they put like an olive tapenade on it and call it something different.
All right, cool. All right, 1:00. Jeff Mackey, the death of Foot Locker. Spaces at 11 as well.
Rachel, Connecticut style is where New York style came from, so you're familiar with it. Watch a documentary or 2.
Thank you, Anne Marie. Thank you, Kenny. Thank you, JC, for gracing us with your presence. Thank you, Steve, for coming back. Thank you, chat, as always. We appreciate you. We'll be back tomorrow with our guest. Christian Tharp is on tomorrow's show. It's been a long time.
Great.
So, all right,
let's get after it.
Go make some money.
Happy Tuesday.
run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah, I can't take no loss.